Hello traders, and welcome back to the Forex Geek. In today's video we're going to be talking about the 3-star candlestick pattern, which is a rare but highly effective signal that can help you identify potential trend reversals in the market. This pattern is often overlooked, but when used correctly it can give you a significant edge in your trading strategy. Stay tuned until the end of this video to learn how to spot this pattern, understand its meaning, and apply it to your trades with confidence. Let's get started. So first, let's talk about the pattern overview. The 3-star candlestick pattern is a rare yet powerful formation that signals a potential reversal in the market. It consists of 3 consecutive doji candlesticks, which indicate indecision among buyers and sellers. What makes this pattern unique is the presence of gaps between each doji, emphasizing the market's uncertainty and increasing the likelihood of a trend change. So we have two types of the 3-star candlestick pattern. We have the bullish 3-star candlestick pattern and we have the bearish 3-star candlestick pattern. So let's look at the bullish 3-star candlestick pattern first. So this right here on the screen is the bullish 3-star candlestick pattern, and it appears at the bottom of a downtrend, and it begins with a doji that forms after a significant decline, followed by another doji that gaps down, and finally a third doji that suggests a potential reversal to the upside. The pattern is often seen as a signal that selling pressure is weakening and buyers may be stepping in. So the bearish 3-star pattern forms. Let's talk about the bearish 3-star pattern. The bearish 3-star pattern forms at the top of an uptrend, and the first doji appears after a strong upward move, followed by a second doji that gaps up, and then a third doji signaling potential selling pressure. This pattern suggests that buyers are losing momentum and the market may be preparing for a downward reversal. So let's hop on the chart and try to find example. Remember, this pattern is a very rare candlestick pattern, so I was able to find just very few examples. We have one here. We have one example here of the bullish 3-star candlestick pattern. You can see it. We have the first candle, which is a doji, and it's followed by another doji that gaps down, just a little gap right there, very small gap, and it's followed by the third doji that suggests a potential reversal to the upside. Now, this pattern is often seen as a signal that the selling pressure is weakening and buyers may be stepping in. Remember, the first step to using the candlestick patterns to trade is by looking at the overall market context. Right here, you can see that we are in a downtrend and we just look like we changed character, so we are looking to start reversing to the upside. And then we saw this bullish 3-star candlestick pattern, which was an indication that buyers are stepping in and the selling pressure is weakening. So let's look at an example of the bearish 3-star candlestick pattern. For the bearish 3-star candlestick pattern, I was able to find this example. So you can see this, have the first candle, which is this doji candle, this bullish, this green candle here, and then we have the next doji candle, which is the bearish candle. Is big, it's a big one, and then we have the next candle, the next doji, which is a bearish candle, followed by the confirmation bullish candle and several candles before we had the break to the downside and the push to the downside eventually. So this is the bearish 3-star candlestick pattern. Remember, it forms at the top of an uptrend or a pullback, and the first doji appears after a strong upward move, followed by the second doji that gaps up, and then a third doji signaling potential selling pressure. So how can you use this trading this candlesticks to trade? How can you use these candlestick patterns to trade? So let's break it down to actionable steps for both bullish and bearish setups. So for the bearish setups, entry rules is for a bearish 3-star, at the top of an uptrend, wait for price to break below the low of the third doji. So you should wait for price to break below the low of the third doji with a body close. Now you can see the break below that low happened in several candles later, which is in this candle right here. So we're looking to take our short trades at the break right there, and this indicates that sellers are gaining strength and a downward reversal is likely. For your stops, place your stops just above the second doji for bearish trades. And for your take profits, you could just target a fixed risk to reward ratio of 1:2 or 1:3, depending on your preference. You could also target significant support levels like this one. Now remember, the very first step, like I discussed earlier, is looking at the broader market context before taking trades based on candlestick patterns. You should be taking trades off key levels, key support and resistance levels. In this case, we are actually bullish, and this was just a pullback. We were able to catch this pullback for a continuation to the bullish side. So looking for key levels, which we would have used to catch this pullback. You can see this level. This level is a valid key level. And then switching back to the candlesticks chart, and you can see that key level holding right here. This is a major resistance level, and this was just for this pullback back into support. Had a double bottom right here, back into this support for continuation buys. So this trade we took was just a pullback into support area to fill in this gap. I think, yeah, to fill in this FVG, this gap right here. So that is how we're able to come about with this trade using the bearish 3-star candlestick pattern. Let's look at the bullish 3-star candlestick pattern on our example here. Here it's easy. We are bearish, then we had a break of structure to the downside, followed by a change of character to the upside right here. Had a pullback into our demand area, our area of demand, which is around here. And if you use the line chart, you can see the main area of demand right here. This is perfect. And at the same time, we saw our bullish 3-star candlestick pattern. And remember, you should be looking to enter at the break of the third candle, the break above the third candle. Now looking at this, we'll be looking to enter a buy trade at the close of that candle, and our stop losses, remember, should be below the second candle, or in this case we could just place it below our support level right here, and then we're looking to take profits at 1:2 risk to reward ratio, or we could be looking to take our profits at significant resistance zones like this one right here. Stretching this, and that's how I would have been able to enter this trade, this bullish trade, using the bearish 3-star candlestick pattern. So advanced tips include support and resistance, combining the 3-star pattern with key support or resistance levels to increase reliability. Also use the combination of technical indicators like the moving averages, the RSI, the relative strength index, the MACD. You could also use volume confirmations to confirm your trades. Also look for increasing volume on the breakout or breakdown to confirm market reversal in the new direction. Alright traders, you've come to the end of today's video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.